we draw the volume profile for that range, value area low and the volume point of control. Red delta, cumulative volume delta is negative. Bubbles here is the big trades, big banks, hedge funds. When the price retraces, the low volume nodes act as a magnet. The reason market was not in a balance in that area, this fair value gap, if you combine that with volume profile, you will see there are low volume nodes. Why did we target a 1 to 5? S&P 500, a large number of red bubbles, which means aggressive sellers. For us to place the stop loss, we can zoom the chart and go order flow footprint chart, precisely place the stop loss. Zoom the chart, the footprint chart, aggressive sellers, this is the price point where we will place the stop loss. That's where we exited the trade for a remarkable winning trade using institutional order flow concepts, footprint charts, volume profile, the secret sniper big trades indicator used by world top traders. I would like to warmly welcome all of you into this live session at 9:30 a.m. New York time. So I'm in the micro Emini-NASDAQ index futures 30 minutes chart. So after the price pushed down, it retraced and we had a winning trade yesterday. If you look over here, the bigger picture is bearish. So because of that, there was a possibility where the price could go down. Now, because the price retraced into this low volume area over here, if the price go down, for the price to target the volume point of control of the previous day over here. So now I'm in the 5 minutes chart. The purpose of going to the 5 minutes chart is so that we can do a detailed analysis to figure out the direction of the price. So you can see this is that price range where the price was ranging. So what we do is for this range, we draw the volume profile. So the reason for us drawing the volume profile is so that we could figure out the value area high of this range, the value area low and the point of control. At 9:40, the price strongly made a push down, a strong displacement. That displacement is with bearish stacked imbalances over here, confirms that aggressive sellers has involved in pushing this price down. Also you can see negative delta, the cumulative volume delta is also bearish and also with high volume. So when we see this, now we are thinking of taking a bearish entry. We understand now there's a chance of the price moving down. So after analyzing the 5 minutes chart, what we do next is we jump into the 1 minute chart to analyze what the price would do next. So let's jump into the 1 minute chart now. So you can see this is that range in the what you saw in the 30 minute and the 5 minute, now in the 1 minute chart. So you can see we draw the volume profile for that range from this point to this point. And you can see for that range, this is the value area high over here, then value area low and the volume point of control. So when the time is New York time, 9:45, the price strongly pushed down as discussed earlier. And you can see in the 1 minute chart, the more sharp red delta plus the cumulative volume delta is also negative and the high volume. So this all supports us a potential bearish trade opportunity. Then also what you see as bubbles here is the big trades. So what you can see over here is the big sellers has strongly involved in this price push down. So what this means is big banks, hedge funds, smart money, large institutions has been involved in this push down. So it supports our idea of a bearish trade entry. So this was the reason why we were interested in taking this trade in this live New York session. So then what we have to do next is you have to wait for a price retracement. So what you can see over here is when the price is pushing down, majority of the bubbles are red bubbles. So what that tells you is this is a seller's market. Aggressive sellers are now strongly pushing the price down. The price started retracing around 9:50 a.m. New York time, and you can see the green bubbles starting to print, and that means aggressive buyers started pushing the price up in this retracement. So aggressive buyers are now heavily involved in this area during the price retracement. So because of that, we are not going to enter into a sell entry immediately, because we need to wait until the aggressive buyers back up or give up, and then we need to see clues of aggressive sellers coming into the market again after the retracement. So when the price came all the way up with the green bubbles, so now we can see aggressive sellers coming back into the market with these red bubbles, and that area is in line with these big sellers pushing the price down. So the price halted in that area. Now this is our first clue of the retracement being paused and a possibility of a potential sell entry. So after seeing these red bubbles, that is where we were analyzing for a potential sell entry in this area. And you can see with these red bubbles, it started to print these bearish candles, which means that it is a sign of sellers entering to the market. Now when this bearish candle printed, you can see the delta is also negative in that moment, plus bearish cumulative volume delta. That is where it supports our trade idea of a potential sell entry. If you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional. You can see the price pushed strongly away from this range, away from this value area low in this area. So when the price pushed away from the value area low, so in this price swing down, what we did was we draw the volume profile. Now when the price retrace over here, there is a possibility where the low volume nodes act as a magnet. So you can see there are low volume nodes over here, also over here. So when the price retrace, we are looking into these low volume nodes because they act as a magnet for the price to attract towards them. The reason is, in a strong price push down, when you see low volume nodes, the market was not in a balance in that area. So the market was not able to fulfill all the orders. So because of that, there are pending orders remaining, and that is why in a retracement, those low volume nodes act as a magnet, because the market needs to bring the price back into these low volume nodes in order to fulfill the pending orders which it could not fulfill because of the strong price move. Now this is what smart money traders call as fair value gaps. In this area you will see fair value gaps printed. So smart money traders look into fair value gaps. However, when you look into fair value gaps like that, it's blindly looking into fair value gaps. But when you look into fair value gap area with volume profiles, so you can see in this 1 minute chart, when the price push down, you can see the fair value gap over here. Now this fair value gap over here, if you combine that with volume profile, you will see there are low volume nodes. When you see the low volume nodes, that's where we figure out the correct fair value gap. So you can see the price is reacting into that area. So that is where we were interested in taking the sell entry. So now when we take this sell entry, what we did was we placed the sell entry just below the bearish candle. So soon after the bearish candle printed, that's where we place a sell stop order, because we wanted the confirmation of price going down below this bearish candle. And so the stop loss we placed in this area. There's a reason for placing the stop loss in this area. And also the take profit we target for a 1 to 5. So you can see, once we place the sell stop order, the price took our order and price strongly moved towards a downward direction. So why did we target a 1 to 5? Is there any reason for that? Plus also, why did we place a stop loss over here? Is there any reason for that? So to answer those questions, let's again look into the 5 minutes chart. So the S&P 500 chart correlates with NASDAQ. So when we take this trade, we are looking into the correlation. So we also look into the S&P 500 chart at that moment. So you can see in the S&P 500 chart, when the price pushed down in that price swing, you can see compared to NASDAQ, S&P 500, you can see a large number of red bubbles, which means aggressive sellers push the price down from here. However, what concerns us is in the S&P 500, at the bottom of this price swing, you can see large amount of aggressive sellers trying to push the price down. However, they failed to push the price down. And when the aggressive sellers fail, and with less effort, aggressive buyers brought the price up in the retracement. Now, what concerns us is when you have large number of aggressive sellers who are not successful, that gives us a worry of holding the trade. If we take a trade after the retracement, we are careful of not holding a large amount of the trade size in this area where the aggressive sellers failed. Now, so we notice this when we look at the S&P 500 chart. You can see the same thing in the NASDAQ chart as well. However, the bubbles are smaller in the NASDAQ chart, but if you look at the S&P 500 chart, you can see it's more visible. Now, why are we showing this to you is, now when we see that aggressive sellers failed in this area, and with less effort, when aggressive buyers bring the price to the top, and if we are taking a sell entry, the idea is we should not hold the trade for long, because when the price come down into this area, there's a chance that these failed aggressive sellers will come out of their trades and their stop losses can get triggered, because when the price come near their price, when they were in a drawdown, they are most likely to exit the trade because they failed. Now, if the aggressive sellers exit the trade because they failed, there's a chance where the price could push up. So that is why we were not holding this trade for a longer time period. So that is why we target for a quick 1 to 1.5 trade where we took the take profits just above the area where the aggressive sellers failed. And then the reason for placing the stop loss over here is, if you look into where the price started to push down in this area. Okay, so let's jump into that area and analyze that. Okay, so now in order for us to place the stop loss, what we can do is we can zoom the chart and go into the order flow footprint chart and look into clues of where we could place the stop loss. So analyzing the footprint chart gives us more insights of where we could precisely place the stop loss. So now let's jump into the footprint chart. So over here in this area where the aggressive sellers push the price down, so I will zoom the chart. So when I zoom the chart, I am entering into the footprint chart. So I'm looking into that area of where the aggressive sellers push the price down. So when I zoom this area over here where the aggressive sellers push the price down, so in this candle what I can see is the aggressive sellers, the bubbles were in this price levels. So in this bearish stacked imbalance, this is where the aggressive selling happened mostly. So when we are placing the stop loss, we look into this area, and when we see this aggressive sellers active in this area, and when we see the aggressive sellers involved in the bearish stacked imbalance, so this is the price point where we will place the stop loss. So just above this we mark this green color line. So this is how we decided to place the stop loss, right? So hope this is very insightful for you guys to understand how institutional traders are placing their stop losses and how institutional traders are analyzing the market using these concepts. So the concepts we are using is mainly order flow analysis with volume profile, and also we look into the footprint of big banks, smart money and large institutions, and we track them using the big trades. So even the stop loss was placed just above the aggressive sellers and the big trades. Okay, so now let's zoom down again into where we took the trade. So once you zoom it down again, you will go into the candlestick chart. So this is that area I zoomed and I put the green color line. So that is where we placed our stop loss over here. So that is how you determine a safe stop loss. So once you determine that stop loss over here, and as I explained earlier, we were not holding the trade for long because of, if you look at the S&P 500 chart, as I said, the failed aggressive sellers can now act as support. That is why we were not holding the trade for long, and that is why we positioned our take profit into this area. So that is how we ride the trades following the footprint of large institutions, big banks, smart money. So we need to follow the footprint of large players. So we exit the trade once we see the price came to this level and we see the price halted in this area, and where we see the bullish candle started to print. That's where we exited the trade for a remarkable 1 to 1.5 winning trade. So you will see once we exit the trade, the price started pushing up all the way, but the trade was exited at the right moment because just above this failed aggressive sellers, and we kept the trade running during the time period where the cumulative volume delta was going down. So when the cumulative volume delta was going down, it supported our trade idea. However, you can see when the cumulative volume delta started printing bullish candles, it's in line with that failed aggressive sellers. What that means is in this area, there is a wall of buy limit orders, passive buyers. So that can act as support and stop the progress of the sell entry. So those are the reasons why we exited the trade fully for a remarkable 1 to 1.5 winning trade. Okay, so I hope this was a very insightful session for you all to understand how to place the trade at the right time, right place, and to place the stop loss, and also how to determine how to take the winning take profit levels. And we'll see you in another live stream session, and enjoy your time. If you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional. Okay, so it's end of the video, and we will see you in another video.